Hi folks, Chuck Fisher with the Noplex stock report system. Just giving you an educational overview of how this system works and how we developed it. Over the years we've been developing a lot of software using statistical models and database programming to track the market. It's kind of a fun hobby. And starting way back in like '89, originally started to work on some of these databases and put together what ultimately became the Noplex stock report system. Let me just kind of go over how we do it. I start off with the Noplex system using what I call off-the-shelf indicators. In other words, typical indicators you'll find in any stock charting and graphing software or online at any of these websites. What we do is we create a universe of stocks that constitute my definition of a correctional phase. What does that mean? I don't want traditionally good stocks, isn't that a funny thing to say? And I'm not looking for bad stocks. And what does that mean? I'm not looking for stocks that are just climbing high or that are doing bad. It's kind of like what I call a Rorschach test. You know, that psychological test where you look at some ink blots on a piece of paper and everybody sees something different. That's what's kind of fun about stock charting, is everybody that looks at the same charts is going to see different things. We'll all see the basics the same, but your interpretation will be based on your past history. And I've been working on this, since 1978, so it's kind of fun to look at these. So I start off with these off-the-shelf indicators, and like I said, just try to find this universe of stocks that are, what I noticed over the years is stocks that are in this correctional phase. I started off my investing life looking for great stocks. I always liked William J. O'Neill from Investors Business Daily. I liked his theory on what makes a stock good. But what I noticed in looking at graphs over the years, what caught my attention were these stocks that are in a little short-term correction, and I always noticed there was a heck of a lot of short-term opportunity. My theory is, let's get in, grab that short-term profit, move on and get another and another and another stock. So that's what we do. With these fundamentals and indicators, here's just some examples. We use EPS quarterly change, you know, your earnings per share, the price versus the market, maybe an average true range or Bollinger Bands. Sometimes we throw together Elliott wave oscillators and develop envelope channels. Moving averages, whether they're front-weighted, simple, linear regression types. We like to look at money stream here at Noplex and time segmented volume. And one of my favorites that I've always found interesting is stochastics. Although if you live your life just following stochastics, you'll miss out on a lot of opportunity. So these are just things that everybody sees or has access to when they look at different stock charting software. But that's what we start off with here at Noplex too. Then we create or update my master database. That's the Noplex system that I developed over the years when I went to college. Back in the days of simple computer programming, I like to create databases. This is a massive database we've made over the years. It's similar. Now, this is what's interesting. It was never my goal to make something like Value Line or what Investors Business Daily does. But as I put this slideshow together for you, I realized I was doing the same thing. I was collecting a database of interesting stocks and actually collecting a database of all the stocks, a history database. And we create and calculate all these proprietary indicators. So in other words, over the years I developed all these different technical calculations, and most of them were crazy. They were statistically based. I love statistics in college, and I would just combine wacky, crazy things that no real statistician would combine. And I did it for two reasons. I like to challenge myself to see if I could write the computer code, the program to calculate the things that the whole world already had access to. I just wanted to sharpen my programming skills, and I wanted to match what the world had calculated with what my computer calculated. And of all these proprietary indicators, not all of them are in use at any given time. A lot of them are just there available for future analysis, okay? Available for use in other algorithms. We come up with a lot of different algorithms over the years and just play around, have fun. This ends up being my master database called Noplex, and it's my brainchild or my toolbox that I use to do my further work, okay? So first of all, we just found stocks that looked like what I was looking for, and second of all, I created this master database. Now, then what do? We got a database of all the stocks, and that's just a bunch of information sitting there, and it's pretty worthless. I mean, it's just it's information about every stock. Now what do we do with it? Here's the real Noplex system. Started back in 1989, working on this with no real goal of creating what we ended up with today, but just playing around. This is where the work gets done. This is where we add what they call artificial intelligence to this master database. So like I said, first we started off with indicators, then we built the master database, which is just a bunch of information, and now the core filter at Noplex adds the artificial intelligence, the programming of what I was looking for. It's done in 2 phases, and I'll explain it. Phase 1 is what I call, just like DNA, right? The DNA in your body. What is that? When they decoded that years ago, some genius guys figured out how to decode or encode or figure out the DNA system. They used a double helix, right? It's that wraparound system, and your DNA is very complex. Well, this uses that same double helix process. In other words, I calculate all those proprietary indicators I talked about earlier across 5 master data points. Normally when you're doing this, you're just calculating things based off the closing price, right? Because that's all that matters. I went back and did all the same calculations based only on the opening price. A database full of that, 8,500 stocks, do the calculations only based on the open. Then I went back through 8,500 stocks, calculate all those same proprietary indicators based only on the high price. Then go back and calculate it based only on the low of the day. Then go back and do the normal thing, closing based on the closing price. And then over the years, because we all find that volume is so important, I calculate those same indicators looking only at raw volume, and then also off a proprietary volume factor that I've come up over the years where, you know, just volume isn't enough. We've all found that looking at charts and graphs, right? If you just look at volume, it's like, I can't figure it out. What do I do? Over the years, I found a way to tweak and calculate a volume, what I call a volume factor, a Noplex volume factor, that tells me something interesting and meaningful about the recent volume. And as if that database isn't enough, 8,500 stocks, calculate all these different proprietary indicators across the open, then do it again for the high, and the low, and the close, and the volume, and the Noplex volume factor. Then go back through and use a 1-day time frame, a 7-day time frame, a 14 or 15-day time frame, a 20 or 21, a 49 or 50, maybe 100, maybe 75 days, maybe 150, maybe 200. Those time frames have changed over the years, but I do that. I just tell the computer to go back through and calculate it looking at different time frames. So when I go into the master database, I can see everything. Phase 2 of this is where I quantify my observations. I told you that 30 years ago, looking at stocks, you know, when you look at enough stocks, you finally see something, but you can't define it. It's like, and I hate to say this, but that old joke or definition of pornography, I don't know how to define it, but I sure know what it is when I see it. Same with this. I can't tell you what those stocks were doing, but I noticed this pattern. So I started to think about what is it that I see, and I wrote these statistics to combine with my indicators to figure out how to filter and end up with graphs that I had previously noticed. So I use my proprietary indicators and filter and cut this list of stocks down for you, okay? And then, of course, according to this pre-programmed set of rule-based parameters, that's what I've developed over 30 years, they're based upon my own unique experiences and my own viewpoint. And you got to ask yourself this when you look at graphs and charts. Why do people stand and stare at art in an art gallery? Wouldn't you just look at it and go, oh, those are trees, that's a dog, that's a sheep, that's a goat, that's a flower, that's a child, that's a baby, that's a mother, that's a mountain. Everybody sees different things, and the longer they look, the more they see. It's the same thing when you look at charts and graphs. Now, I do all that, and I've got all of that in my database. But I also have to have filters to filter the current market behavior, because how the market is today is different than how it was in the 80s and 90s, how it was in the dot-com era, how it was in Y2K, and how it is now. So I add another set of filters, right, to figure out how can we find the stocks for today's current market, because the market's always changing, right? For example, the dot-com filter was different than today's. How do I test the results of this current market behavior filters? Easy. When I do what I do and I program what I program, in the end, it gives me a list of stocks, and I look at those and for visual results. Do those charts look like what I had seen. You know, in other words, out of 8,500 stocks, I'm looking for a certain pattern. Does my methodical computer program give me that list of charts and stocks that pass this filter? And I'll know it when I see it. Then if it didn't do it right, I went back to the drawing board and tweaked and changed the program. This is something I've done over 30 years. It took a lot of results, a lot of effort. Then, just because that's interesting doesn't really do anything. I had to track, once I got it to work fairly well, then I tracked the actual results. Could I buy it? Could I sell it and make a profit? And reminder, these are modules that can be replaced in different market conditions. I fully expect the CMBF in 5 years from now is going to be totally different than the CMBF I'm using today or that I used 5 years before. Okay? All that work ends up creating what I call the artificial intelligent picks, right? All this work just to get to this heavily filtered list, okay? And reminder, the computer program has chosen these stocks at this point. So if I've done my job right over the years and wrote the program right, man, this program is just growing into a monster. But it ends up filtering out these stocks. Let me tell you about aspartame. Do you remember that sweetener in the food and drinks that we drink nowadays? Aspartame, you can Google that on Wiki. A scientist discovered it by mistake, right? He had spilled some stuff in his laboratory. He used his wet finger to kind of clean it up, and then when he licked his finger, he noticed it was sweet. It was a mistake. He didn't intend to invent aspartame, but he did. The same thing happened with me when I wrote my database software and had it go do all this filtering I'm telling you about. Later I went back and I noticed a huge mistake. And to honestly, today I can't tell you what that mistake is. It's somewhere in the code. I documented what I meant to do and what I ended up doing. But what was interesting is I stumbled on a unique proprietary indicator. I call it M1 or Magic 1. That ended up being very predictive, but it was a mistake. It wasn't what I intended to do. And when I went to fix it, I thought, hold it, it's actually producing the results I want, okay? So that's an interesting story. We'll talk more about it at another time. Next, we got to see what the stocks look like. We got to look at the graph. So I use a variety of charts for the final picks. So once my computer program, Noplex, filters these stocks, then I will use about 7 to 12 recent charts, and those will change over the years. And I have about 24 available for tie decisions, and I use a scoring system. And what I've learned over the last probably 15 years is the lesson of loose versus rigid trading rules. I always wanted the perfect, rigid, mechanical, mathematical, statistical system that would tell me exactly what to buy. Well, life isn't like that. The computer and all my beautiful algorithms can only go so far. And in the end, what I used to do as a mistake is I would then use my own charts and graphs, and I would have rules for those, and I would miss out. So I've learned to be real relaxed, to trust the Noplex algorithms, and then loosely look at these and see, hey, this stock was good on this chart. Maybe it was good on chart 1, 3, and 7, but it wasn't good on 2, 4, 5, and 6. And I just lay back and let it be what it is. I don't kick stocks out. I just use a scoring system. The lesson I learned is this is not a perfect science. I always wanted it to be because it's based on math. But the truth is it's more of a perfect art, like a cat. Perfect, right? And that flaw, remember, that aspartame mistake, it still exists in my program because I happened to make a mistake that turned out to be very profitable. So I originally desired to have one number or indicator or score that would tell me, you know, kind of like William J. O'Neill's EPS or RS ranking. I want to know the stock to buy. It isn't that simple. But I wanted that, okay? So I developed my first proprietary indicator called M1 or Magic 1. I only called it Magic, not to be, this is a magical formula. It was only for my own use. I didn't plan on sharing this with the world, so I thought I'm going to call it the magical thing I'm looking for. And I called it M1. And later, I built another indicator called M2. So analogy is, what is M1 and M2, Magic 1 and Magic 2? It's similar to an A1C test for diabetes. What does that tell you? That tells you how bad your disease is, right? How good or bad. My system still has that screwed up mistake in the M1 calculation, but it ended up being a beautiful mistake that turned out to be super predictive and super profitable. Then I built the M2, the second indicator, and I did that one right. I didn't make a mistake, but it was built off an imperfect M1, so it was like a freak of nature, a flaw, and I ended up using another indicator to balance that, okay? And what that means is, let's get back to our graph. Sorry about that, we jumped ahead. Talking so much, I get excited. And so that is about the end of it. I just wanted to show you what the system is comprised of. And what that means is Noplex has been developed over 30 years, and it's a master monster database with a hugely complex algorithm to track, and not to pick the final stocks, but to get me from 8,500 down to about 150, and then later the Noplex filters that further down to 35 and probably 12, and then I probably look at 7 stocks a day through my subjective system. So it's interesting, it works, and thank you for sharing. I appreciate it.